All right, everybody, welcome back. Listen, the market is ripping right now. SPY's rallying, QQQ pushing higher. Everybody on social media suddenly thinks they're a professional trader again, right? And this is exactly where beginner traders lose most money. Not doing fear, doing excitement. But green candles make people emotional. People start chasing, they oversize, buying resistance, right? They force entries because they're scared to miss out. They don't want to miss that move. That's typical. But just because the market is rallying does not mean you should trade emotionally. The market makers already know we emotional traders, right? We're chasing price. I do that myself as a seasoned trader. But that's the matrix. Most retail traders are reacting emotionally inside of it. But us here with the Unique Trader Group, we wait for confirmation, we wait for structure, and we wait for opportunity. We already have a gap right here towards the downside as the market dipped Friday last week, right? The market's closed today. The time of this recording is the 25th, right? And we see that there's a gap, and we gapped up from that drop, right? The war, Iran, Trump, the meeting, right? Peace talks about the war, ceasefire. You know how these things work. And now we're up. People are chasing, and now we're headed for maybe a possible pullback. But we won't know that until the market opens up. You understand what I'm saying? All right. I hope so. Every time you show up, I'm going to give you value. So make sure you smash the like button and subscribe to the channel. All right. Now, let's get back to the charts. All right. So this is the ES, right? The futures market. This is going to move before the SPY, right? You see the S&P 500 E-mini futures. This moves before the SPY. But here's the biggest mistake that beginners make. All right. And I'm going to put the charts on the SPY itself. All right. Here's the SPY. Okay. Now you're not going to see the same price movement you see on the E-mini because this isn't the futures market, right? This has to open up at 9:30, right? But this will be the chart we're trading options on. That's right. We're trading options. We're not buying shares. We're day trading options where we get to control 100 shares of whatever stock we choose, and we like the SPY. Why is that? Because it gives us that range that we want. Tight spreads in the bid and the ask inside of the option chain, all right, where we buy our contracts. We want to make sure that they're liquid. Even if you don't understand the bid and ask part, just understand that we're trading options in stocks like the SPY that are liquid so that we're able to buy and sell and get out with no problem. That's the core of it all, okay? All right, so now, with that said, I am going to go back over to the ES because I think it's really perfect with the setup and the way things happen. Like, you know, the biggest mistakes that beginners make during these type of rallies. They chase expansion candles. You already see these candles are happening right now. We are on the 1 hour time frame on the ES mini, right? So the chart's ripping right now. The Qs are squeezing, and suddenly everybody's buying after that move already happened. You see that? So a bad entry creates emotional exits. Why is that? Because guys, listen, every time you make an order, right, you put a stop loss somewhere or you put in a limit order, you're putting something inside of a system that's computerized, right? And so every time somebody does it, and depending on the scale, the tip of the scale, right, mean reversion, right, how many calls and puts inside of the market, people trading up or down, like who's on the wrong side, every time orders are filled, that's what you see with these movements. So a bad entry is one of those things, and it creates emotional exits. Professional traders, though, we wait for confirmation. All right, we wait for confirmation, volume, retest, a time frame alignment. We don't react emotionally to candles. We just execute on that structure. You got to understand that. All right, so it's like a sequence of what? Reversal, bounce, and a breakout retest. A lot of people always ask me, Coach V, how do you actually enter into a trade? And that's a really, really good question. Luckily, tonight you guys are going to get that game. Simple, step by step, all right? So grab your notes, pay attention, screenshot if you need to. All right, so that is a really good question. How do you actually enter? All right, so it's going to be three things, all right? I keep this simple. I've been trading about 10 years. These three things are, reversal setup, bounce setup, and the retest setup, all right? These are the three main executions I look for most, all right? Reversal setup, bounce setup, and the breakout retest. All right. Now, what does that look like? First, let's do the first one, the reversal setup. All right. Move the chart over here. Okay. Now, the reversal setup is when you see a lower high beneath a previous range. weakness shows up, momentum rotates lower, all right? That's what a reversal setup, all right? A lower high beneath a previous range. I'm going to show you that. Now, we are on the 1 hour. Since right now we've been going up, we have to find that. Okay, now I think we found one here. All right, now let's check it out. What do we mean by that? All right, remember, we're looking for lower high beneath a previous range where the weakness is showing up. Okay, now let's see what that is. All right, right here up top, we have an actual range here. Okay, we have an actual range. Okay, why is that? Because we have established a high point and a low point within a time frame. Okay, here's a high point, here's a low point. All right, so we are within a range, and price suddenly at that time frame it broke out of that range. All right, and this candle here, okay, make sure you can see. Okay, you have two of them, but you know, ideally, all right, these are lower high candles. Okay, these are lower high candles. And I want to make sure that you guys can see that, okay? Structure is telling us that these are lower highs, and you can perfectly see that. Here's the lower high, okay, right here. Here's the structure of the lower high, and what we have is a prominent show of weakness here. So the momentum is going to rotate lower, and that's exactly what we did. We rotated lower towards previous demand zones. Okay, so that's what that would be. All right, that's a reversal setup. All right, weakness, lower high, but lower range, the previous range. Right, now let's go over to this way, and I'm going to show you the next one, right, that you guys wrote down, which is the bounce setup, right, which I think is a really good setup. All right, one of my favorites as well out of the three. All right, price creates a higher low above support, buyers defend that level, and momentum continue upward. So let's go here currently, right, since we are in an uptrend on the ES and the SPY. I'm going to show you exactly what we mean. Now let's just use here. Okay, I'm going to circle it. This would be considered a higher low. Why? Because these price points, when price didn't go any further down this way, right, it failed to go back down that way, right? We didn't get that, guys, right? We continue higher. And so with that said, since we know that we continue higher, this price creates a lower high because it's higher than this one, so a lower high. And this means that the bulls are stepping in, momentum is shifting towards the upside, and what do you get? You get momentum continuation. All right, the buyers are defending their level, and you see that here, and we continue to make that same pattern, and we made it there, right, which would explain why we got that bounce here with that ironic news about the peace wars between Iran and the United States. All right, hope you guys are with me. All right, smash the like button if you guys are enjoying this valuable content. All right, want to give you some actionable things. Now, number 3 is the breakout retest. The breakout retest is one of the most explosive trades I like, right, out of the 3. And it's very powerful. There could be a possible breakout retest setting up, so you guys are getting some gems in this video. But we're going to use one over here that happened on the 20th of May, all right? So where's the breakout retest? First, you have another range, of course, all right? I'm going to show you quickly with a horizontal line here, all right? You have this horizontal line right there, okay? Now, price, what did price do, okay? All right, we broke out of that range, the red line, that's the top of the previous range. We broke out. And we came back and we retested that same area here. Okay, the range is right here, guys. Okay, this is the previous range. That's the range. Okay, that's your breakout retest. One of my favorites. Price breaks out of the key gamma level, right, which is the wall, right, the gamma level where the dealers have to hedge, right, inside of this casino, right. The retest, it holds, right. You with me? The volume backs in and momentum expands. That's structural execution. Here's the volume. Look down here, guys. That's the volume. We see the volume. Okay? We see the volume, all right? The volume came in right there. And we got that continuation towards the upside. That's what a breakout retest look like. Now, possibly we could get these same type of moves. You never know, but you have to watch patiently, and you have to be able to understand how to spot opportunity, understand what are we working with, right? What are the risks? And once you establish these risks and you have an edge, you're able to execute. And these are the 3 things. Now, if you want to remember those, all right, you wrote them down, you can go back and study, but I want to move on along. We need to talk about something very important called position sizing. All right. Now we're going to head over to Tesla and we're going to use this chart instead of using the SPY. All right. We're going to use this chart. Now, listen. I want to stress trading small, all right? Compounding your account and staying calm. Position sizing is very, very important, all right? It's not random gambling. Everybody thinks that trading huge size is how you become successful. But consistency comes from trading small enough to stay emotionally calm. Let me say that again. Consistency comes from trading small enough to stay emotionally calm. You cannot compound consistently if your emotions control your decisions. This is what Mark Douglas taught, a famous trader. Mark Douglas. Probability thinking, emotional consistency, long-term execution. It feels good when you really feel like you know how to do something, when you're sticking to a plan and it's paying you off. That feels good. Why would you want to run from it? That's how you know this is just not like catchphrase talk, right, about trading. Like literally probability thinking. All right, there gonna be some things that is gonna spot out opportunities, but it's gonna take your precision. Now, every candle controls your psychology. That's what it's about. So, if you have $1,000 account, why are you risking $700 on one trade? You understand what I'm saying? It's really going to mess with your psychology. So you have to trade small, you have to stay calm, and you have to compound consistently. And how do you do that, all right? I'm going to show you. It's called time frame alignment. That's right, time frame alignment. You want the 4 hour that equals your direction, right? The 4 hours for your direction, and the 5 minute is for your entry, all right? Now, let's go ahead and go to the 4 hour here on Tesla. Thank you guys for your patience. Okay. I'm going to erase everything we have here. Make sure that the chart is clear. Okay, thank you guys for watching. Now, there are several things that I notice on the chart already. Whenever I see one, you know, there are several things you can notice, all right? Pretty sure if you're watching or you know how to trade, you notice these higher lows, which we talked about, right? We created a parallel channel, all right? Price is going back and forth within that channel, right? Rotating, right? We see a couple of things here, right? We also see that we have done what? We have broken out of structure here, break of structure. Okay, we were doing what? Let's make sure you guys can see. You can clearly see that we were doing what? We were in a downtrend. Okay, and this aggressive candle with volume. I want you to see this. All right, aggressive candle with volume. Right here. Down here you see the volume. See the aggressive break and retest. We just talked about that. Remember, break and retest. That's one of our trades. And what do we get? That explosive move. You understand what I'm saying to you? All right. You always see something if you really pay attention and you learn. All right. That's what Tesla. So there's a couple things for you to realize about Tesla off the rip. And this is where we are now. So what's next? All right. We have the RSI type indicator trying to curl towards the upside. Now, listen. The 4 hour time frame that creates our direction. We see the context of what the 4 hour is. The lower time frames create entries. So if the 4 hour trend is bullish, why are you shorting every red candle on a 5 minute chart? If I enter based on a 4 hour setup, why would I panic after 5 minutes? Okay, the trade needs time to develop. Sometimes the best moves happen during power hour or the end of the day or at the hours. If you're trading here in the United States with me, I'm here trading from 9:30 a.m. to 4 o'clock p.m. Eastern Standard Time. All right. And so the trade needs time to develop. Patience is a part of the strategy. All right. Remember, again, sometimes the best moves happen during power hour from 3 to 4 o'clock at the end of the day or at the hours. You get those explosive moves. But patience is very important. It's a part of the strategy is to be patient. All right. Now I want to talk about something. All right. OCO orders. All right. OCO orders. Entry, stop, and target. Now, I use Webull, all right? Webull is one of the platforms that I use on my laptop, my desktop, and on my phone, all right? I can trade on the go. They trade futures, all right? Webull. Webull is what I trade on. We do what we call OCO orders. Why do I like OCO orders? Because OCO orders allow you to do what? They allow you to take a trade, place a trade all at once, and it lets you define your entry, your exit, and your risk all at once. Okay, you understand that? It's one of the biggest things that helped me become more consistent. You wanna pay attention to that. You that's something that's Very important, and I want to dive deep, all right, into this for you to understand. All right, listen, guys. OCO order is a pair of linked trading orders where the execution of one automatically cancels the other. Traders commonly use the feature to establish both of the profit taking level and stop loss limit simultaneously. So it ensures that as soon as the one condition is met, the remaining order is instantly canceled. So how does it work? All right, how an OCO order works. This is how it works. All right, you can screenshot it if you need to. Imagine that you are buying a stock. All right, you're buying a stock. Okay, as they say here, the example is $100. The take profit order, you set your limit order to sell the stock. If it reaches 110, then you secure your profit. A take profit order once it goes from 100 to 110. All right, $10 profit. Your stop loss order, you set an order to sell if the price drops to 95 to prevent further losses. That's a stop loss order. Now what's the result? If the stop climbs to 110, your profit target fills and the 95 stop loss is automatically canceled. Conversely, if the stock falls and hits to 95, your stop loss triggers, right? And it closes your position for you. Isn't that amazing? So that $110 limit order is automatically canceled. Now, why do we use it? And we're going to move on. The reason why we use the OCO orders is for risk management. Remember I said it's about defining your entry, your exit, and your risk in the beginning of the video? All right, I didn't just say that to say it. It's important. A philosophy I stand by. Exactly what I teach, right? And exactly what I built my trading app, Depth Edge. I built this app on that very philosophy, all right? AI integration with the philosophy inside of my book. If you want more information about that, there'll be some information about that down below in the link, okay? Well, I'd love for you guys to test out the app that I built based around institutional orders, order flow, and some other things that give you edge, okay? So take advantage of it. Now, back to these OCO orders. All right, why do traders use this? Because risk management, it eliminates the stress of needing to manually cancel an order while executing another in a fast-moving market. Sounds beneficial, right? People busy, have things to do. It will come in handy. You want to think about risk, but you want to participate, all right? Number 2, automation, all right? Automation, it helps traders enforce their trading plans without letting emotions dictate their exit strategy, okay? Very important. Number 3, all right? Preventing unattended positions without OCO. If one order fails, the second order can remain active and lead to unattended short or long positions later on. All right, that's what you want to understand. Now you can kind of just, you know, if you think about what that does for your mental, if you're trying to trade a stock that's volatile, but you want to be in the trade because you see the setup, the OCO order allows you to spend the money you want to spend in order to take the trade, define where you want to get out at to protect your risk, even though you're accepting that $5 risk, right? Even though it's a good risk to reward, you're accepting it. And you're also telling the computer, the OCO order, to take you out once it hits your target. You get to do that all in one click. But you find out your levels, like right now, what we're doing on Tesla, so you can understand the setup. And that's why it's important to know about these things, all right? So your entry is planned, your stop is planned, your target is planned. That's why I use OCO orders. One cancels the other. Now emotion gets removed from the equation. Now I'm executing, not reacting, all right? Wait for opportunity. Okay, guys, listen, anybody can feel like a genius during the market rally. Anybody. But real traders are built during moments where discipline matters most. We don't chase candles. We wait for opportunity and we just define the risk. We stay patient and we execute with structure. Sometimes you wait all day for one setup. That's the truth. But one clean trade is worth more than 10 emotional trades. Stay disciplined. It's going to pay off in the end. And remember, we do not chase the market. We wait for the opportunity. You understand? Gotta wait for the opportunity. So what I expect for Tesla, as you can see here, we are above the 21. I am expecting, based on structure, for us to fill the gap towards 140. We see a little bit of chasing. 140 gets hit, right? Orders get ran, and 450 becomes the next target. This is where the gamma is, all right? That's for Tesla. Also for the SPY, all right? You already know that the ES is ripping, all right? The futures market is ripping. And so we are at a different level here. So we're actually going to go over here to the futures market so we can see. All right, we're already pulling back. Now remember, this is going to be important for next week, tomorrow when the market opens up. You understand that? We have that gap here, right? There's a gap. Okay, remember our strategies, right? What we like those reversals, those bounces, and those breakout retests. The 21 is here. I like to use the 21 in the Bollinger Bands. The red and the green line here on my chart, all the indicators that I use to help filter trades, not to tell me when to take a trade, all right? It's all about your setup and how you use them. All right, what's the edge, all right? Risk to reward, all right? And so I'm expecting tomorrow for this range to possibly break, and we bounce here off of this 21. This is the setup that I want to take. I want to take the break above this range here. I want to see this candle get taken out with volume, all right? Second trade will be us falling here to fill this gap and creating what, a higher low here, all right? If we could possibly do that. These are one of the trades that I want to take, all right? Number 2 trade will be right here, ultimately here. And if we do not get this and we try to break this structure, then I know that we are doing what? We are trying to get back down towards this range. All right, and I want to think about not just shorting because we're so low. That's what rookies do, right? They try to chase candles, but we understand that we are back here in a zone where we have massive demand. All right, massive demand right here. So we don't want to just blindly come in short. No, we don't want to do that. We want to wait for what, right? We want to wait for what we just talked about, price bouncing. We want to wait for that bounce. Right? Remember we talked about the underbelly earlier for the reversal trade. Remember that? The underbelly, we want to see what? We want to see that. We want to see that lower high. 1 second, guys, as I navigate the screen. Okay, you want to see that lower high after the initial bounce. You don't want to be the one chasing the bottom fill. Okay, you want to see price bouncing these zones here. However it gets there, right? All right, you want to wait for volume to come in, a candle close, take out, a bearish engulfing. All right, you want to enter into a trade to go back towards the downside. Okay, this is the optimal trade. That's what I want you guys to know. So it's going to be a very, very juicy trade coming up next week. There are going to be more videos dropping. I hope you guys understood that. I hope you understand what's going on next week. There are a lot of geopolitical things going on right now, and you really just want to focus on where's the money flowing at and being very selective. You want to be very selective. You want to check the market sectors. You want to check that flow. That's going to be very important for you to understand. Understanding sector rotation. All right, where is the money going? Right, where's the money going? These are very important things to understand because you don't want to trade blindly. You don't want to just chase everything. You want to just make sure that you're trading with the type of eye and the type of edge and the type of data that allows you to trade flawlessly without the emotional things that come with trading. You want to just manage your positions and be ready, guys, like we're doing right now. You're preparing. You just want to be ready. You want to be ready. Got to be ready. That's the best thing to do, all right? And also, don't forget about the Fear and Greed Index, all right? Fear and Greed Index. This index here, all right, we're at 59. We are going back towards the left side a little bit, all right, giving the room for the market to go up a little bit more, all right, but you want to wait for some pullbacks. You gotta wait for some pullbacks, all right? Now, thank you guys for joining me tonight. Hope you found some value, all right? This will be a one step and a one thing for a plethora of video, so be expecting more. If you have any comments, any questions, leave them below. I talk back, I engage. Any subject matter you guys want to touch on, I would love to speak with you with them. Remember, this is the Unique Trading Group, where strategy meets mindset, and discipline turns into income. And I see you guys in the next one. Peace.